Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased technical analysis. And guys, we need to talk. The S&P 500 did it, guys. It really did it. This is the SPY weekly chart. And you see that little pinkish line right there? That's the 200-week moving average that I've been telling you guys, that I've been mentioning to you guys all week. Okay? The reason why I mentioned this to you guys is, well, it looked like a magnet to me. It looked like the market just wanted to touch it. But I can't see the future. My analysis are not predictions. I'm just going by the technical analysis and the setups. Okay. But the reason why I felt like the 200-week moving average was going to test is because, remember, guys, I've been talking to you guys about that multi-year trend line that we had from September 2020, October 2020, June 2022 low, and how we broke that down. We broke down that trend line back on September 23rd, okay? You guys know I do unbiased technical analysis, okay? These are not my own personal opinion that I think the market is going to drop. But I did say, since losing this multi-year trend line, as long as it holds as resistant, as long as the breakdown of that trend line holds, there's a big chance that we was going to go test the 358-ish level, which was the 200-week moving average, okay? SPY chopped a lot. Okay, this is 15-minute chart. Friday's price actions here. Monday's price action here. You can see it established a range here from 371 down to 363-ish. All right, and then on Tuesday we ended the day with a false breakdown, which was bullish, and then the following day on Wednesday, Wednesday we ended the day with a false breakout, which was bearish, triggering more downside. Okay. I unbiasedly acknowledged when on September 28th, when we recaptured that multi-year trend line, I unbiasedly acknowledged it. I said, hey, we got a false breakdown setup. As long as above 369, I am bullish. But if we drop back below 369, I am bearish. And it worked out really well. Okay? You can see we're on a downtrend since August. The market chopped this past week to build strength for more downside. That's what happened, okay? Don't shoot the messenger. Uncle Chad is just trying to report the price action to you guys. That's all I'm trying to do, all right? But I'm looking at the weekly chart here. We did close below the 200-week moving average. And I'm looking at these red candles. Yes, they are getting smaller. They are getting smaller as it drops, which is a sign that momentum is decreasing a little bit. But you're looking at these candles, we're not seeing any bottom wicks or lower wicks. We did see a low wick last week, but that was still a really bearish, big body bearish candle. And we're looking at this week's candle, you know what I mean? Like, not seeing much buying pressure. The bears literally whoop the bulls behind. Okay, and I mean that unbiasedly. All right, I'm not trying to talk crap about the bulls. So here's the triggers. I'm going to make it very simple. If you guys follow technical analysis, know the levels, know the setups, and you just trade it unbiasedly, okay? Here's the trigger for more upside, okay? Because right now, we are in breakdown mode, all right? Remember when we broke the trend line from June low, July low, right? And we had that third touch on September 6th, okay? You see that? From June low, we broke that down. It was bearish. You see the falling wedge that Uncle had. We broke that down. It was bearish. All right. Now we broke down the 200-week moving average. All right. So is it possible we can get some dead cat bounce, a relief rally, or even a full-blown reversal? Of course, it's always possible, but it's not guaranteed. When the market is dropping like this, it's important. We do not try to call a bottom. Nobody knows where the bottom is. Nobody knows where the bottom is. All right. All we got to do is watch for the setup and just trade it unbiasedly level to level. At least that's what Uncle Charles is planning to do. That means if SPY gets back above 358 and holds above 358, that's a false breakdown setup. A false breakdown. We drop below a support and we recapture that support. A false breakdown. That would be a bullish setup, and I would look for calls. All right. So if SPY can recapture that 200-week moving average, I will be short-term bullish. All right, my targets, I have levels above 358. If it can clear, I have 360, 362 to 363 range. the 364.5 level, the 366 to 367 zone. And of course, we can let's see if we can go back and test that 370 to 371 zone. All right. But in order to trigger that upside, the price action must recapture the critical level of the 200-week moving average. All right. 358.16 is where that 200-week moving average is. If it can recapture that, Uncle would be short-term bullish, and maybe we can get a relief rally or even a dead cat bounce. All right. If you just trade it unbiasedly, level to level, no home runs, because in this market, don't try to go for home runs, especially if you're looking for calls. Okay. You can get lucky, of course, but you just never know what the market's going to do. The market maker's going to do. And I just want to give you the trades or the setup with the highest probability. All right. So no calls unless 358 can recapture. And I advise you to play it level to level. Like I said, 360, 362 to 363 zone is above. Take profit at each level. Shave it off. Okay. I look for longs when a resistance clears or a previous support level recaptures. I look to short when a support level fails. Okay. Looking at the weekly, that 200-week moving average failed. All right. I'm not seeing anything bullish about this chart. I know a lot of you guys don't like that I'm saying that, but you guys understand I'm not saying it because it's my own personal opinion. All right. When I said that, when we break the the multi-year trend line, I'm favoring the test of the 200-week moving average. That's not a prediction. There was no way in hell that I could have predicted that. There was no way in hell that I would have known that it was going to test. It just happened to test. And I was just trading based on the price action, using my technical analysis, defining my risk. Where should I cut loss? That's all I'm doing. Okay? Trading the setups unbiasedly. So no calls unless 358 is recaptured, targeting the upper levels. All right, but as long as below 358, guys, don't call a bottom. Because as long as we're below 358, the breakdown holds. That's very bearish. I have levels at 354 to 355 zone, 350.5-ish. And then I have the 50% retracement level at 349. Okay, this fib level is from June low up to January high. Okay, and it's at 349.12, the 50% retracement level. If you're going to try to long direct, I would try at the 50% retracement level. I would also try all the way down at the 61.8 retracement level, which is all the way down at 318.2. But there's no guarantee SPY will drop that low, so let's not talk about that just yet. All I can tell you is as long as below the 200-week moving average, which is at 358, I have support at 354 to 355, 350.5, and then 349, which is the 50% retracement levels. Okay? So stay bearish as long as below the 200-week moving average. If we can recapture that, short-term bullish. Short-term bulls, you know what I mean? Just a scalp play, maybe a quick counter trend move, okay? And leave a runner. That's what I like to do. I take most profit at a level, and then I leave a small runner, a small position that won't offset my profits. If the market decides to bless me with a home run, that's what my runner is for. Okay? That's what my runner is for. But, that's the best I can tell you guys right now. There is no economic data release that I'm aware of coming next week. Okay, fundamentals are very bearish and is usually serving as catalyst to drop the market lower. Okay, but next week, maybe we'll get a relief rally. Maybe we'll get a dead cat bounce. I don't know. But I don't think there's any economic data to push the market down. So bulls got a shot. All they need to do is recapture some previous support levels to put some momentum to the upside, okay, for bulls. All right, guys, play it unbiasedly. This was an amazing week. Targets were hit. I know a lot of people didn't like how bearish Uncle Charles was sounding, but hey, look at that. It played out. All right, I'm trying to give you guys the best info I can give you guys based on the charts so that we can catch the moves. All right, we are not market makers. It's not our job to impose our will on the market. All we can do is identify the setups, trade it unbiasedly, try to catch the move. Where the market makers, the market movers, where they're actually moving the price, that's what we want to try to catch a piece of. We don't have to catch the whole thing. It's usually impossible because who knows what market maker's going to do with the price. All we can do is try to catch a piece of the move and end the day green. Does that make sense, guys? Let's move to Triple Q. Triple Q we're testing this fall. I got this falling wedge here as well. Testing support of it. Didn't quite break down, okay? So support of it for next week is 256.5. Resistant right now is at 269. All right? I mean, excuse me. Support is at 265.5. Did I say that? And resistance is at 269. All right? So I can't get too bullish unless QQQ can clear some previous support levels. Clear some resistance, but recapture some previous support levels. Starting with that 269 to put 272 back in play. 274-ish, then possibly 276. Above 276, I will favor a bounce up to 280.6s. That will be the resistance test of this, falling wedge right here. And of course, above 280.6 would be a breakout. Okay? Unbiased technical analysis, guys. But as long as we are below 269, I am bear biased and I favor more downside. Why? Because the price action is bearish, okay? If 265.5 fails, that's the breakdown of this falling wedge, and that should put 260, 256.5, and 251-ish in play. QQQ. Now let's move to Tesla. Tesla is testing my trend line that I have from June low connecting to July 6th low. Okay, we got the third test finally. It kind of defended, but you see that top wick, okay? A lot of selling pressure, okay? And even though we tested this trend line, it defended technically, but it didn't show much buying pressure. So to be bullish on Tesla, it has to get above 365.7, let's say 366 to be more safer, because that's the June low. June low is around 265.7, excuse me. June low is around 265.7. If SPY can recapture that, why am I mixing up the words? If Tesla can recapture that, get above 266 to be more safer, okay, that would be, maybe I will favor a dead cat bounce or a relief rally, all right? But as long as below 265.7, that is very bearish. That's a breakdown of this trend line, and it's also a breakdown of the June low, guys, all right? So bullish above 266, as long as we're below 266, stay, bear bias. Okay, upside targets are 270.3, critical level 273.5, and then 277.3-ish for now, okay? Below 266, could drop down to 260.7, 256, possibly even drop down to 248.5, but just understand, below 266, Uncle is bam, bear bias. Let's end this with the option flow. Now, guys, option flow is showing big money, is extremely bearish, guys. Look at the size of these, in these contracts, millions of dollars worth, guys. 341, 343 strike price. Okay, they are very bearish, and they got time. They got some time on their expiration date. Expiration date is October 21st, and I have been seeing a lot of November 18th popping up lately as well. Okay, they've been starting to pop up. So these big money guys, they got time on their contract. They're not gonna sweat it if the market gives them a little dead cat bounce or maybe a relief rally. Okay, but all I'm telling you is they are pouring millions and millions of dollars into SPY on puts with that 341 to 343 zone as a strike price. Okay, they must have a reason why they're doing it. They must. Or else they're going to lose some money. QQQ, 94% in the puts. Goodness, very, very bearish. Nothing poking out to me the way SPY does, though. But it's definitely overall bearish, and Tesla overall bearish as well. Okay, guys, thank you guys so much for watching. If you want more content from Uncle Charters, please consider joining, subscribing to my Substack, okay? Because YouTube only get the aftermarket analysis from me. Substack gives you the morning analysis and all my levels. But if you want more, maybe that's not enough. Maybe you want more support, more content from Uncle Charters, okay? Consider joining my Discord. I give you morning analysis, real time during the market analysis, after market analysis, all that good stuff. And it comes bundled with a couple other resources that I use that you will get access to. But other than that, thank you. Peace.